Are we good to go?
We're just short of one member for a quorum for the vote, but for the adoption.
Oh. All right, let's do this. Let's go to the AG's report and we'll take that at the end.
Okay.
It's no problem.
Okay.
Take that at the end. All right, colleagues, good morning and welcome to our meeting this morning. Sister, please just check the other members. I do know that some are traveling because of this week. All right, colleagues, it's not a hectic meeting for us this morning. Much of the work will be done by the AG team. So let me take this opportunity to welcome you, colleagues, and to welcome the AG team who are here this morning. All right, I think Uma Zambani may help us with that quorum issue, Ben. Am I right? Right, now let's go to AG. AG team, you've got 4 presentations for us this morning. Alexkor, SABC, property trading management entity in the compensation fund. Let's take them in that order. So we'll start with Alexkor, move to SABC, PTME, and then we'll close it off with the compensation fund. So AG team, may I hand over to you, and we are in your hands, and we'll start off with Alexkor. Over to you, AG.
Good morning, Honorable Chairperson, Honorable members. My name is Andres Segeto. I'm from the Office of the AG. Honorable Chair, Honorable members, I see that my colleagues from the unit that takes care of Alexkor have not joined us yet. I was hoping that they would do so, Honorable Chair, as you're doing your introductory remarks. However, what I ascertain from the list is that we may potentially be joined by the partners who ordinarily do the audit of Alexkor. As Honorable Chair, Honorable members would be aware, it is a Section 4.3 audit, so meaning that it's one of those audits that the AG has opted not to conduct ourselves. It is done on behalf of the AG by a private audit firm. I'm just trying to ascertain if that particular partner is also on the platform. In the interest, I see that the head of the unit responsible for the Alexkor audit is waiting in the waiting room. So if you could just be admitted to then take care of his portfolio. So with your permission and indulgence, Chairperson, I'll just ask that we maybe just provide another second or so while we wait for him. Thanks, Chair.
Okay, I'm sure that's fine. No problem, Mr. Segeto. Are we winning with that admission?
Yes, we are.
Okay. All right. Please give them the sharing rights as well, and then we'll get going.
Honorable Chairperson, I see my colleague has joined. My colleague's name is Mr. Fumulani Rabonda. He is the caretaking head of unit, or the unit business unit leader that's responsible for national audit within which the Alexkor institution resides within. I'll hand over to Fumulani, who will then do the necessary business in terms of the briefing required. Thank you, Honorable Chair.
Thanks, Andres. All right, let's get to that.
Good morning, Chair and honorable members of the committee. I see my video is upside down. Is that what you're seeing on YouTube?
Very interesting. You may want to.
Let me try to record again to see if I can fix that one. Sorry about that, Chair.
It's just an image of what Alexkor is. Upside down.
Oh, Mazambane, your wit is on point this morning. You remind me of that song by Joe Nama Trading, Down to Zero. That's really, really done. All right. On that really light note, let's. I think that was the entire presentation of the briefing by AG. Alexkor's upside down. Nice one, Mazamba. Yeah, Andres, you see, this is what happens when half past doesn't become half past, eh?
I know that. Apologies, Chair. So I hope my colleague is winning on the other side. Chair, maybe then in the interim, if we're not winning, instead of waiting, Chair, we could move over to the next presentation, Chair.
I would suggest that we do. Let's take the SABC. And then Alexkor will come in after that.
Thank you, Chair. Honorable Chair, as you would be, like I mentioned earlier on, I am the business unit leader for the unit that takes care of, amongst others,
recording in progress.
Portfolio. So within our portfolio, we do the audit of the SABC and the related institutions and entities within the comms portfolio. I am joined by my colleague, Ms. Suret Talyard, who will be taking us through the presentation. I trust that Ben has already given her the presentation rights, because I see he just like literally disabled mine as I was about to fly the presentation. Honorable Chair, honorable members, insofar as the actual outcomes are concerned that will be flighted shortly, from our point of view, unfortunately, the institution, the SABC, did not attain favorable audit outcomes for the year under review. The institution obtained a qualified audit outcome. Honorable Chair, honorable members would recall, and I trust that you are quite au fait with the different audit outcomes, being the disclaimer, adverse, qualification, as well as unqualified, and then ultimately the one they will strive for being a clean audit opinion. Suffice to say, the institution, therefore, in terms of its financial outcomes, obtained a qualified audit outcome. The qualification, honorable Chair, honorable members, is primarily driven by the institution's inability in the previous financial year to completely and adequately disclose and deal with its opening balance of irregular expenditure. Honorable Chair, honorable members would note that I explicitly mentioned its opening balances because, obviously you have the opening balance when you look at the financial statements being your comparatives, and then you have your affairs for the current year, which is under review. So for the current year under review, we did not identify any issues with any other matters in the financial statements. It was on the opening balances of the irregular expenditure, which is a similar root cause and driver for the qualification the entity obtained in the previous financial year, Honorable Chair. Honorable Chair, I see I've done half the presentation already and the screen is not sharing. We are. At least we've got something to look at. I do apologize for that, Honorable Chair, honorable members. As mentioned, Honorable Chair, honorable members, I will now be dealing with the slide. Can I get a confirmation that both are able to see the presentation?
Yeah, it's up on the screen. Colleagues, are we all good? All right.
Thank you, Chair. I hope it's also legible and of sufficient size. Like I mentioned, Honorable Chair, if you look at the 5-year audit outcome history, unfortunately, the institution over the past 2 financial years. Yes, Honorable Chair.
Take it up another 25%. I think it's just there, yeah, in terms of size.
Okay, Honorable Chair, let's see what we can do.
Yeah, okay, let's try that and see how that goes.
Thank you, Chair. As mentioned, Honorable Chairperson, if we look at the 5-year history of the institution, unfortunately, it has not been successful in attaining any favorable audit outcomes, with the past 2 years being driven by the irregular expenditure and the institution's inability to deal with the opening balances. Honourable Chair, honourable members would recall for those that have been on the SCOPA committee for a while and have been following the affairs of the institution, that the irregular expenditure has been quite a significant problem, with the institution at some point reporting approximately 5 billion worth of irregular expenditure. And insofar as the process of irregular expenditure is concerned, Honourable Chair, when the Office of the AG conducts an audit on the area of irregular expenditure disclosure by management, we look at what management has disclosed. Is it complete, reliable and accurate? So in other words, we look at the balance and we'll say, does it contain all the things that are supposed to have been disclosed by management? So that's the completeness exercise. We look at all the outside activities that inform the expenditure by management and determine whether all that expenditure was compliant with the relevant laws and regulations. And if it is found that a particular transaction was not compliant with laws and regulations, it is then required to be disclosed as irregular expenditure. And if that disclosure was not done, then you would ideally sit or ordinarily sit with a problem of completeness. And even the balance that management would then present to the auditors, we also make samples of that balance just to make sure that indeed what they have disclosed really meets the definition of irregular expenditure. So we test it from both sides. So to do those particular tests, Honourable Chair, Honourable Members, one also requires to have relevant and sufficient supporting documentation. And in this instance of the SABC, the opening balance concerns have really been dogged by the lack of sufficient and appropriate supporting evidence for some of the old contracts that were entered into by the institution. And so therefore, on an annual basis, for the past 2 years, when they presented their financial statements, we were not able to satisfactorily test the balance of the opening balance of irregular expenditure in the absence of all of those supporting documents. It is important to also highlight, Honourable Chair, Honourable Members, that management is engaged in a particular process where they are trying to clear the qualification. So to this extent, they are doing investigations into the drivers of the irregular expenditure balance, like I explained, seeking the supporting documents to make the determination whether whatever management is going to present in future would be accurate and reliable and complete. The importance, Honourable Chair, Honourable Members, of also completing and conducting this exercise would be from a point of view to also engage the National Treasury to request for any condonation to write off these balances, because otherwise it will just lie on the face of the financial statements. There's a disclosure, for kingdom come. So you need the supporting evidence to demonstrate and support the condonation process. However, before we also get to the condonation process, Honourable Chair, Honourable Members, there is also the all-important task of the consequence management that must then be effected. So if you read, Honourable Chair, Honourable Members, you just go a little bit down in terms of the briefing document, you'll see under compliance with legislation that we have been reporting consequence management at the SABC for the past 3 consecutive financial years, also primarily driven by the fact that when we come in, we assess a year later, in the absence of having all these supporting documents to be able to deal effectively with the opening balance of the irregular expenditure, you are also not able to then enforce your consequence management processes. And because some of these contracts, Honourable Chair, Honourable Members, also relate to ongoing contracts that were entered into the previous financial year, you also end up with a lot of irregular expenditure that keeps on continuing. And to that extent, the Office of the AG also reports the expenditure management that you would see the fourth or the third bullet from the top on section C of the report on compliance with legislation. Honourable Chair, I'm just going to just quickly go up a little bit. In terms of the emphasis of matters, Honourable Chair, obviously these matters are issues that as the auditors will highlight to the users of the financial statement. So the users of the financial statement being oversight structures such as yourselves and those charged with governance, as well as any person on the street that might benefit from looking at the financial statements of the institution. So it's not necessarily that it's a modification or a qualification. It is something that management has disclosed, but we are just bringing it to the attention of the user. One such instance, Honourable Chair, it's probably the most significant one for us at this point in time, would be the material uncertainty that relates to the going concern. So, Honourable Chair, you would note in the 5-year audit outcome history, in the years that the institution, the SABC, got a disclaimer and an adverse, we didn't have anything on the going concern emphasis of matter, and that's primarily because in those particular years, the outcomes were driven by our discomfort around the going concern principle, where we felt it wasn't supported or adequately, documented in the financial statements, and hence it formed part of the modification. In subsequent years, despite best efforts of management to deal with the disclosure requirements, we still note certain concerns, because when we look at the operations and the nature of how the entity is faring its business, we are concerned that it's still incurring significant losses. The cash flow situation is decreasing. Honourable Chair would note that in the year that the qualification was removed, which was the 8th year, was the year in which the institution received a bailout of approximately 3.2 billion. However, that money was provided to the institution to go and implement certain initiatives that they had committed or promised. If one looks at the nature of their operations being the ability to generate revenue and then the ability to also manage costs, we find ourselves in a situation that we'll elaborate on a little bit later, where they are still incurring a lot of cost that exceed the revenue that they are able to generate, meaning that the entity is incurring significant losses year on year. And if that happens, it means that you are then eating into those reserves, and whatever cash was given to you in terms of the funding, and the situation then does not become sustainable, because once the bailout and the funding that was received as a result of the bailout has been depleted, what then happens, because your own operations are not able to sustain your business. So that's the importance of that material uncertainty on the going concern. And then the other ones, Honourable Chair, highlighting to the users that in some of the balances, management has applied significant judgment. So when we did the audit of those particular balances, we didn't have necessarily an audit concern, but because of the significance of those balances and the fact that management applied judgments, we then highlight the users so that you can make an informed decision and understand the institution based on those judgments made by management. Honourable Chair, the report on compliance with legislation, Honourable Chair would also note that for the past 5 years, there's always been significant reporting in the audit report in this regard, with regard to financial statements and performance report. Honourable Chair, honourable members know that the PFMA bestows a certain amount of responsibilities on the accounting officers and accounting authorities. One of those responsibilities is to prepare accurate, reliable, and complete financial records that are aligned to your financial reporting framework. So if you are qualified, it means that there were certain gaps in your financial statements, and thereby also meaning that the financial statements presented for audit therefore did not meet that compliance requirement, and hence we include that particular non-compliance paragraph. But we'll deal with it a little bit later in the report as well. I've spoken a bit about consequence management. I'll deal with the other ones as and when we deal with the detail of the presentation. Honourable Chair, honourable members, you would have noted from the table, I took quite a bit of time to talk us through how the table, the information is contained in there and how it flows. The following couple of slides or pages that we will fly will just give a little bit more context in terms of those crosses that we were seeing in the previous pages. So the first one we'll deal with is the qualification paragraph. I think we've spoken at length about it, Honourable Chair, honourable members, the irregular expenditure, the opening balance, management's inability to make sure that what was disclosed in the financial statements is accurate, complete, and reliable because of the root cause of not having appropriate and sufficient documentation to determine what the adequate disclosure should be. There are some root causes that drive this particular problem. We noted some inadequate training of staff in a supply chain management environment. And we are very careful to use the words inadequate, Honourable Chair, honourable members, because management does do certain training, but the training does not seem to yield the necessary desired results. So therefore, we still have to flag it, because you can't train and you still sit in the same situation. So we fully acknowledge and appreciate that there might be some training that's happening, but it's not adequate at this point in time to deal with the concerns that are being raised. Then there's also the issue of capacity, in the sense that the head of supply chain management has actually been vacant for quite a while now, Honourable Chair. If I'm not mistaken, it should be 2 to 3 financial years. And this is also contributing to the slow progress in strengthening the internal control environment insofar as it relates to supply chain management. And then, Honorable Chair, I also mentioned this when I spoke to the consequence management aspect, that there are investigations that are conducted by management, but we are concerned with regard to the slow progress of these investigations. And this ideally, like I mentioned, should be done in order to quantify the irregular expenditure and to deal with this balance, and then also, more importantly, to make sure that we are able to implement consequence management. And I think we've put a sort of a warning sentence there at the bottom of this particular page. Honorable Chair, honorable members, we've all seen over the recent past that the longer these processes take, the higher the risk of non-completion, because people resign, people move, and the documents, 4 or 5 years, if you can't find a document, it becomes a little bit more problematic. Your chances of finding documents and tracing them are higher, and being able to respond to them if you respond a little bit quicker. So what we would recommend is for management to really apply the necessary haste in terms of finalizing this process. It's a process that's been ongoing for 3 years now, actually a little bit longer. If you take into account irregular expenditure has been qualified over the past 5 years, but with specific reference to the opening balance, there has been now a 2 to 3 year process that would ideally require some form of speed or urgency in its finalization to effectively deal with this balance, Honorable Chair, honorable members. And then also the filling of the head of supply chain management. And then once we have the supporting evidence, we trust that this will facilitate the process of consequence management. The emphasis of matters, Honorable Chair, honorable members, I've already spoken to the going concern, explained why we are highlighting the going concern, because of the unfavorable ratios that we were identifying as part of the audit. The revenues keep declining, Honorable Chair. You'll see a graph now that we've included in the briefing note. The cost base, even though it's decreasing, it's still not decreasing at an appropriate rate that would make sure that the sustainability of the organization is taken care of. And the other emphasis of matters, I explained that these are just for mere benefit of the users. Now on the compliance paragraphs, Honorable Chair, honorable members, I also explained the requirement on the annual financial statement. There's a relevant section there in terms of what they were supposed to have complied with. Root cause again, action plans. They have been quite involved in this journey over a period of time. It's not yielding the necessary desired results because it's not being finalized. Expenditure management, I did explain the expenditure, the regular expenditure that you are disclosing, the institution's inability to not have been able to prevent it is then highlighted as required by Section 51 of the PFMA. We did speak that it's primarily coming from all the previous year's balances. Insofar as it relates to fruitless and wasteful expenditure, which is one maybe I'll highlight that I haven't touched on earlier, in the middle row of the page, Honorable Chair, honorable members, there was, I think it's about 20 million of fruitless and wasteful expenditure that was incurred as a result of interest incurred on late payments, and then also on a lease agreement where the institution paid for office space that was unoccupied, and this has been the case from 2016. So those particular, lease payments were then deemed to be fruitless and wasteful expenditure, and we also likewise, implore management to appoint the head of SCM, make sure that they implement full and proper internal systems of internal control to not incur fruitless and wasteful expenditure as well as irregular expenditure. Consequence management, we've also spoken about. Section 51 of the PFMA does require the accounting authority to go and investigate these instances of fruitless and wasteful expenditure, irregular expenditure. And again, Honorable Chair, honorable members, I'll mention explicitly again that the institution may be doing some investigations and some of them might be linked to operational processes. But what we are interested in as the Office of the AG are those that pertain to the financial statements. So the fruitless and wasteful expenditure. So if you incurred fruitless and wasteful expenditure this year, we'll give you a gap year as the Office of the AG and then come next year and say, well, you've had a year now as the accounting authority in terms of the responsibilities required by the PFMA. Do go back and do the necessary required investigations. Treasury has issued specific guidelines on this. So the guidance is clear in terms of what is required. And in the absence of us seeing any of these investigations, then we then report that consequence management may not be instituted as required by the PFMA. And again, it's a situation where the institution, in the absence of those documents, they would not know where to start and effect those consequence management. So they would really need to finalize whatever other processes they were engaged in terms of the records management. Strategic planning and performance management, Honorable Chair, you have also seen it at the summary table. This was a slide, I want to refer to it as nonsensical, but I don't want to seem like I'm unnecessarily whipping the institution. But there were a couple of smaller sub-institutions for which decisions had been taken appropriately to deregister the institutions. But in the interim, whilst those other processes are ongoing, as at year end when we came, the institution was still on the books and the records of the SABC. SABC Foundation was then, in terms of the planning processes, required to have also submitted its strategic planning documents to be approved as part of the group's overall, strategic planning documents, and that wasn't done in this event, resulting in that non-compliance. It's also one of those that either you did it or you didn't do it. You can't go back and fix anything and resubmit. You are required to submit it at a particular point in time, and so therefore, if there was any form of oversight at a particular point in time, then the non-compliance then remains. On predetermined objectives, Honourable Chairperson, Honourable Members, the previous financial year, the SABC actually did not have a finding on its strategic and performance reporting in terms of AOPO. In the current year, unfortunately, it regressed. We selected the strategic goal of content and platforms for audit, and this material indicator that we looked at is the percentage of local music that was broadcast on PBS radio stations during the performance period. And the institution reported 76.7% as achievement. However, we were not finished with the reporting after supporting evidence in terms of what was reported, and consequently, we're not even able to check whether any adjustments are necessary to what is reported. We just, it's basically a limitation on this achievement, Honourable Chair, Honourable Members. Then, irregular expenditure. So far as it relates to irregular expenditure, Honourable Chair, Honourable Members, we've already spoken about the fact that the irregular expenditure is the driver for the qualification. However, in this particular segment, we highlight specifically the amount that was incurred in this current year compared to the previous financial year. So there is a reduction in the irregular expenditure incurred year on year, which is might be construed as a good thing, that they're moving in the right direction. However, the balance remaining is still worrisome and would require management's attention in this regard. A lot of it is also as a result of some of the old contracts that were entered into the previous financial year for which we are continuing to make payments. However, we can't just continue saying, well, it's an old contract. Whatever contract is 3, 4, 5 years, so you'll continue disclosing irregular expenditure in your financial record. So there also needs to be some form of, a concomitant action in terms of how these instances are actually then also dealt with. Then the 100 and whatever million, the 200 million, Honourable Chair, as per standard operating procedure when we present the SCOPA, we try and give a little bit more context as to what informed the balances of the irregular expenditure that was incurred. Of what is some fact for us still is the fact that if you look at the drivers, the incorrect evaluation criteria applied to bid is still a significant driver for the amounts despite the improvement and the deviation. So engaging in inappropriate deviations or deviations that are not always reasonable and or justifiable when we assess the reasons that are being advanced for management. So obviously, Honourable Chair, Honourable Members, the legislation does allow for you to deviate, but at the point in time of deviating, you need to make sure that you've prepared yourself and you've documented your reasons and that they are reasonable and justifiable. And obviously, the auditors, when they come a year down the line after you've made your decision, they only have your evidence to work on. And so we raise some concerns. You can see it's a concern that's flowing through as well as payments that are made without contracts. So we do acknowledge the fact that the balances have reduced significantly, but you'll see the root causes or those particular same type of instances are still following forward that would require management to look at them. We've spoken about some of the internal control deficiencies for both years. This is internal control deficiencies for both years. We've spoken about the deviations that are not always aligned to the requirements and the inadequate monitoring and the training element as well. The fruitless and wasteful expenditure I touched on a little bit earlier, Honourable Members. This just gives the detail. The 7 million related to the interest on late payments, and then the 11 million was more on the unoccupied office space where we were paying a lease, paying for a certain portion of the office that was not occupied. Honourable Chair, honourable members would recall that as part of the AGSA's journey to assist in the process of transparent reporting and accountability and good governance, where the PAA amendments, where we now are able to report on material irregularities that were found to have, institution as non-compliant, and it meets certain criteria in terms of having resulted in material loss or misuse or loss of a public resource or harm to the institution or the public at large. We are able to affect the steps as included in the 3 circles below. So we can either refer it or we can recommend action in the audit report, or issue remedial action, binding action to the accounting officer if the recommendations are not implemented. And then ultimately, if all else fails, then the issuance of certificate of debt. Insofar as the process relates to the SABC, we did pick up a irregularity about 2 years ago, and related to a security service provider where the contract was awarded to the bidder who did not score the highest preference points. Obviously, the SABC then looked at as part of the investigations, what transpired and what resulted in this particular instance, and the matter was also referred, and there seems to be an SIU process, but the SABC has challenged the method. We reported on it last year as well, and because it's still in court, we'll note it for follow-up in the next coming audit, Honourable Chair. In the interim, the service provider is at least providing the security services as required. The issue then becomes, are you actually overpaying for the service that you are receiving or not? That's just the incremental portion that was the cause for concern, for a reason of having selected the bidder who did not score the highest preference point. Honourable Chair, in the interest of time, I'm not going to spend a lot of time on the turnaround plan. The turnaround plan was just included to demonstrate the concern with regard to the financial sustainability and viability of the institution. So what we would do, Honourable Chair, is recommend to oversight structures such as yourselves that when you engage with the institution, please ask them specific questions around the turnaround plan. They must be able to substantiate and support whatever initiatives they are reporting as achieved or in progress. Because obviously we will say, well, you paid all your creditors. From an audit point of view, we're happy. We don't see any issues with your creditors. But in your turnaround plan, you would have put yourself certain milestones in terms of when you would have wanted to pay certain creditors, or when you would have liked to park some of them, or how you would have liked to structure your debt management and your debt recovery processes. So that would be questions to also maybe just ask them in case they get an opportunity to also come and brief the oversight committees. What we do highlight, so as mentioned earlier, is our cause of concern is around the financial sustainability and the utilization of the 3.2 billion grant that was given to the institution in 2019, like mentioned earlier. The reason why we highlight that, Honourable Chair, is as also mentioned, the institution continues to incur operating losses. They are even forecasting that over the next 3 financial years, they'll continue to incur losses. So if you're incurring losses, it means that if we may then take a step back, it'll be 6, 7, 8 years where the institution has not been able to show a profit, and that surely must raise some alarm bells in terms of its financial viability. And then they're still continuing to also project negative operating cash flows, and that means that, again, like I mentioned earlier, the operations are not generating sufficient cash to pay their short-term debtors as and when they arise. And then, on this particular slide here, I'll just, in concluding the financial viability discussion, you'll see the cash declining, the bailout that was assigned or allocated to the institution. So the importance of that then means that once this cash has been depleted, the question will then be what next? The revenue, you can see the declining from 2019 to 2021. Although expenditure has been decreasing, which is a good thing because it means you are implementing sufficient cost containment measures, the rate of it has not been to the same rate as your reduction in revenue, because you will see you are decreasing your expenses with 10%, but your revenue is dropping at 12%, which is more than what you are able to contain in terms of your cost. So that results in your loss actually increasing year on year. Honourable Chair, we've spoken about the status of internal controls. I've tried to sort of give pointers as we were going through the presentation. We are still concerned with regard to the record-keeping processes, as well as the ability to comply with key laws and regulations, as you would have noted, the paragraphs included in the audit report, as well as the table on page 4. Then, Honourable Chair, to spend just 2 minutes on the recommendations that we've issued. So in terms of the recommendations to management, we really advocate that management really conclude the process on the irregular expenditure. I've spoken at length on this particular topic in page 4, and I've highlighted the importance thereof because it impacts a number of processes that are required to then ensue, like your consequence management, as well as then even then their own ability to go to the National Treasury and ask for condonation. And then the implementation of the turnaround plan and the strict monitoring thereof we've spoken about, and then the internal controls, proper reviews over the performance reporting, financial and performance reporting to make sure that valid, accurate and complete reporting is facilitated, and then the consequence management as well by concluding these ongoing investigations and making sure that the investigations also comply with the requirements of the PFMA. Insofar as it relates to the committee, so we'll ask some indulgence and some efforts from the committee as well. So from the committee side, like we mentioned, the qualification, if they can deal with the qualification, then immediately you've seen on page 4, there was an improvement in terms of the number of qualification areas, and then also in terms of robust engagements when they come and brief, that they don't come again with another turnaround plan or initiatives that are different to the turnaround plan they submitted. Because remember, when they asked for the 3.2 billion, Honorable Chair, Honorable Members, they made certain commitments and certain promises in terms of how those funds will be utilized to make sure that the institution becomes a viable and sustainable operation going forward. So it's important that we interrogate those in the successful implementation and the monitoring of those initiatives committed initially when we allocated all these significant funds to the institution. Honorable Chair, Honorable Members, that is our side from the SABC. I do apologize. I see I did take a little bit longer than the allocated time. We'll take questions or inputs or comments, or alternatively, I'll be guided by Chairperson if we are going to take all comments at the end of all the presentations. Thank you, Chair.
Well, thank you very much, Andres. The chair has just apologized for a short while. He's going to be back. For the time being, let us deal with matters that relate to questions, because this is the briefing in preparation for such hearings in as far as these institutions are concerned. But there is indication on some areas of a positive movement, though there are areas which relate to some form of sustainability, which ought to be assured, and therefore our questioning and our own interest in terms of probing is to seek to understand those kinds of areas. Is there anyone who has a comment, question on the presentations? On the gadget, I don't see a hand raised. Let me check on my phone. Oh, there is Mazambane. Mazambane.
Nagog. Thank you, Mr. Chairman, and good morning to everyone. I hope I'm not upside down. The camera keeps going off. Oh, there you go. All right. Mr. Chairman, through you, the AG's made the point, I suspect not strongly enough, but he did make the point about a concern about SABC being a going concern. So my question is indeed the AG happy that the SABC is a going concern? If it is classified by the AG as not being a going concern, what are the implications then for the board in terms of the legal requirement that's required to be followed when an entity is no longer a going concern? Thank you, Mr. Chairman.
I see no other hand except for that one from Honorable Lias. AG?
Honorable Somyo?
Yes.
Thank you, Honourable Chair. So from our side, Honourable Chair, would recall that when we, and I suspect the comment made by Honourable Leah insofar as us maybe not being strong enough is driven by two factors, Honourable Chair. So the first one is, Honourable Chair, like I explained a little bit earlier on, if one looks at the going concern principle, how we assess from the audit point of view, Honourable Chair, Honourable Members, is at the time of signing the audit report, or the latest, or whichever one you choose, or of the financial statement year end. So if we take the financial statement year end is 31 March of the annual year end, and then by the time we issue our audit reports as the Office of the AG, it's usually ordinarily it would be the 31st of July. So by the time we sign our audit report, we take a step back and then we say, as the Office of the AG, looking at management's financial statements, looking at the operations, looking at the key ratios and the key drivers, the revenue, the expenses, the liabilities and the assets, do we feel based on that assessment, the going concern assessment, that the institution would be able to sustain itself for the foreseeable future? So the foreseeable future in terms of the auditing standard, Honourable Chair, is defined as up until the next audit cycle. So when we look at it to say, well, today, will they at least be here by next year when we need to come back and do the audit? And if that's the case, then you tick it off. So, Honourable Chair, informed by the process, the assessment that was done by management, first as required by the legislation, and then our assessment of management's, or our evaluation of management's assessment, we were satisfied that the going concern principle was met at the point in time when we've signed the financial statements. However, because the compliance side of it was met, there are still these unfavorable indicators, and hence why we've included quite a significant portion, or dedicated quite a significant portion of our presentation to talk about, for example, the fact that we are highlighting on here the material uncertainty, because we see the ratios do seem to indicate a declining trend in terms of the resources available to the institution. So in short, Honourable Chair, when we did our assessment, we were satisfied in terms of the going concern principle that was met in the previous financial year. However, we do highlight to the oversight structures all these unfavorable ratios and trends and these declines that are happening, because that could certainly pose a problem for us that is required to be dealt with proactively. Then I think the next question would sort of become, I don't want to call it irrelevant, but I'll still explain it, because now I've explained that they are a going concern. But in the event, had they not been a going concern at the point in time when we did the audit, Honourable Chair, Honourable Members, the implications for the board would have then been to start certain processes. There are processes that are clearly outlined in the Companies Act, which is also applicable on the institution, that sets forth the liquidation process that must be engaged in by a particular board. But we all know that that process is influenced by a number of other factors. But there is a board decision that is clearly prescribed in the relevant legislation, like I've outlined, and we would have just assessed had they really then started instituting all those actions as required by the Companies Act, had that been the situation. Thanks, Honourable Chair, Honourable Members.
Thank you very much, Andres. Honourable Les, are you okay with the reply?
Thank you, Mr. Chairman. Yeah.
Thank you very much. I think what they have sort of created is some form of a standard form, which highlights a number of areas which should be our focus when we have those institutions, when we deal with their annual reports and finalize their own hearings. And those areas are going to assist us to probe even further post the audit as how far are they standing on the indicators, whether slowing down or low down or improving on those critical areas. I think the question which Honourable Les has asked is carried through even in other related entities that we have received their audit so far. Are there any other questions, colleagues, so that we can move forward? 1, 2, 3, 4. In absence of such, so the AG team, you you are currently through, not so? Oh, there's a Andres. Are you okay?
Yes, Chairperson. Chair, are we moving on to the next presentation, Chair?
Yes.
Okay,
Yes.
Thank you, Chair. I think we will then take the colleagues from National E-Chair, who are the colleagues that are responsible for Alexkor. They'll give us a quick brief in terms of the audit progress and the audit status for the benefit of the committee, and then we will go back to the order as was initially assigned by Honourable Hlengwa at the beginning of the session. With your permission and indulgence, thank you, Chair. I'll hand over to Phumlani Rabonda.
Okay, are you no longer upside down?
No, Chair. No, I managed to fix the challenge. It was just an accountant trying to be an IT specialist there. And let me apologize, Chair, and to the honourable members of the committee for that technical glitch earlier on, and also appreciate being allowed to go back and fix that problem. And now I think things are in order now. Chair, you will see that from the Alexkor side, we do not have a presentation or a write-up in terms of the message. And the reason for that is that, unfortunately, the financial year ended 31 March 2021 are not yet finalized as they are still subject of an audit that's ongoing now. There have been some serious and significant delays on the audit process, which started in mid-July with the late submission of the financial statements by Alexkor. And since the commencement of the audit in July, there have been multiple adjustments to those financial statements. The feedback that we got from the audit team is that they have so far audited about 6 to 7 various different versions of the financial statements. It's also worth noting, Chair, that Alexkor is the auditor for Ngubane and Company. It is not the audit of the AGSA. Our role as the AGSA as the public sector auditor is to oversee the audit and support the audit team in terms of monitoring the audit. But the accountability and the responsibility to conclude the audit and sign off is that of one and company. So that's the feedback that we have come up to so far. I'm also joined here by Megan Naidu, who is the audit partner from one and company, in case there are follow-up questions with regard to the message around the delays on the audit, Chair. Let me pause here and invite comments and questions from the committee. Thank you.
What questions now and comments? What is the presentation?
No, I mean, on the message that we've given, that we do not have the presentation because the financials are not ready. They are still subject to an audit. So in case the honourable members have a question around that particular message.
Okay.
Thank you.
Okay. Honourable, yes. Honourable, yes.
Thank you, Mr. Chairman. I mean, there's very little we can say except just to ask. I mean, how many 67 versions? What is going on? We joked about it being upside down, but it seems to me that it's just mixed up. Can the audit partner who's actually dealing with Alexkor perhaps give us an explanation as to what the delays are, and I think that the question about going concern and director obligations on this one are probably real and very serious. I last visited Alexkor probably 7 years ago, and it was a disaster then. Perhaps there's a need for us to do an oversight trip, Mr. Chairman, but perhaps the assigned auditors can give us some sort of indication of what's going on with the audit and the production of the financial statements. What are Alexkor saying about these multiple financial statements?
Okay, Lish. Can we give over to you, Phumlani and the team?
Thank you, Chair. Through you, Chair, let me invite Magenadu to then respond to the question. Thank you.
Thank you, Fumulani. Chair, can you hear me okay?
We can hear you and see you.
Thank you. I just wanted to maybe correct something there. It wasn't 67 versions, it was 6 to 7 versions. So roughly 6 or 7 versions of the financial statements. And I think, so let me start with where we are in the process currently. So I expect to be in a position to sign off the financial statements by the end of this month, the end of February. Right now, we're at the very back end of the 3 risk management processes that we go through, namely the review by our technical in the firm, a review by our engagement quality control, and then, of course, our review by the AG. So we're at the back end of those 3 risk management processes, and I expect to be in a position to sign off by the end of Feb. I think in terms of the delays, obviously having many changes to the financial statements takes up quite a bit of time, and of course lengthens the risk management process at the back end because, and I'm sure the AG will attest to this, is that what we try to do is give everybody a quality set or a set that is of high quality. So we don't really send the first or second versions, that we get. We try to make sure that everything is up to standard. The process lengthening. In terms of just addressing the comment about a going concern, although the financials are not finalized as yet, I will just make the point that Alexkor has made a profit for the 2021 financial year. And in terms of profitability, the 2021 financial year is much better than the 2020 financial year. Thanks, Chair.
No, fine. Your last comment is made behind the risk of not finalized financials, where the detail would be of necessity to track whether such gains are normal gains, ordinary gains, genuine gains, last longing gains. So we would have to await that process, so that we're not necessarily led to believe that indeed they've made that profit. So I think you underline the fact that the financials are not finalized. So though there are signals, you see, that's it.
Correct.
That's right. Honorable, yes. Are you okay?
Thank you, Mr. Chairman. We await the report by, I think it was the end of this month, was it? Maybe I didn't listen carefully, but will it be tabled in Parliament at the end of the month?
Can you confirm that? I think from Honorable Lee, some are taking that this would be a report tabled to Parliament end of the month, or the finalization still talks to other things.
Yeah, I will be in a position to sign off the financial statements at the end of this month. In terms of reporting to Parliament, I'm not sure whether that, if I end up signing off in the last 2 or 3 days of this month, obviously that, wouldn't be possible.
Who is responsible for such realization? Well, of course, it's a board and accounting officer of the institution. You are on the financials.
Through you, Chair.
Yes, Mulani.
Yeah, just to assist. So once the auditors sign off, then that will be subject to the AGM that the shareholder needs to arrange. And then post that, the minister will then need to come to Parliament to table the annual report. So those processes will then be reliant on the DPE processes. We understand, because Alexkor's company, as soon as the financials are sent off, they need to make sure that there is that AGM and then post that the tabling with Parliament.
Okay. So at least financials will be through end of the month, and then would await the internal processes in the institution, which will somewhat to lead to the tabling of such to Parliament, and will await that process. Meaning, therefore, if you want to pressure anybody, would have to pressure the executive authority and in fact the board of that institution. Thank you very much. Next presentation. Andres.
Good morning, Honourable Chair, Honourable Members. Sorry, I now jumped in before Andres could introduce me, so I'll just introduce myself. My name is Cornay Meiber. I'm the business unit leader for the unit that is responsible for Bmte and public works. So thank you for this opportunity to, thank you for this opportunity to share with you the outcomes and to brief you on the Bmte audit for 2020-21. I'm going to ask Apanduli if you can just flag for us the presentation, the briefing document. Then we can continue.
Good morning, everyone. Corney, may I have the host give me rights to share on my screen, because I currently don't have the rights.
Chairperson, if the right to share the presentation can just be given to Apanduli.
Sindombi, Ben, can you share the rights?
I'm trying to find an option here. I don't know why I don't seem to find it.
We've given the rights to Apandule. She can share the presentation.
Given the right, there it comes, the Kwacha.
Thank you. Apanduli, we can go to page 4 and we can start there. Thank you so much. So, Chairperson and Honourable Committee, if we look at public works and Bmte, and we've included public works because it's the same management structure, it's the same environment. So we thought we just reflect on public works as well, while we then also focus on Bmte. If we look at the audit outcomes for both the department and the entity, we see that over the last 5 years, there was actually stagnation, with the department being financially unqualified, with findings both on compliance and performance information, and then the Bmte having improved in 2016-17 from the where they had a disclaimer to 2017-18 where they were then qualified. But they have since been qualified and weren't able to move into the position of being unqualified. They also have a number of non-compliance findings, and up to 2019-20, they also had findings on performance information. From 2020-21, the findings in terms of their performance information was included and reported under Public Works. We, however, need to note that Bmte historically were always qualified on the asset register, specifically where the extent of the properties were not accurate. And that resulted in the valuation of the assets not being appropriately reflected in the financial statements. Through their actions and initiatives, they were in a position to correct that. There were also misclassification in the past of assets under construction, and they also managed to address that. For the current year, however, we've identified leases and had findings on leases in prior years. However, in prior years, it might not have resulted in a qualification. For 2020-21, when we audited the leases, it was materially misstated. And it was basically as a result of lease contracts information that is not accurately and appropriately recorded on the Occubus, which is the system that they use. So we've seen that amounts that would have been included in the contract is not what is being captured on the system, and therefore whatever they would pay the landlords might be in excess. In some instances it was underpaid. And then we've also seen that in some instances they would have contracts, but that contracts will not be captured on the system at all. As a result of them not monitoring and reviewing their contracts and making sure that the information is accurately captured, we did identify that payables, the amounts that they are liable to pay, was overstated by 450 million. And as this was raised in the past, there was action plans, but these action plans, although it could have resulted in improvement, wasn't properly implemented and it wasn't monitored. And because they didn't focus on these actions to improve the qualification, it actually became worse than in the previous year, resulting in a qualification. Our recommendation was to say, if there's audit action plans and they must manage that and they must monitor that and they must make sure that it is appropriately implemented so that they can achieve the desired outcome and improve on the accurate reporting. They also need to look at the population, seeing that there's information in the contracts that is not accurately captured on the system. They will have to go back to the entire population, make sure that contracts that is still valid, that the information on those contracts is captured on the system, and that they maintain that information, and therefore going into the monthly reconciliations. Contracts come to an expiry date, so they need to be aware of those contracts that need to be renewed. When there's renewals, there might be changes in the agreement conditions, and they need to make sure that they continuously update that so that there is accuracy in the amounts that they pay to their landlords. This also had an impact on the receivables because they would collect information from the user departments, and if they use it based on incorrect information that is captured on the system, they're also not going to manage their receivables appropriate. So we can see that there was material misstatements of 534 million rand in terms of the receivables for leases. And that were made up of various, mainly overstatements, but also an understatement, where we see that the accommodation debtors is not accurate, and that was overstated by 17 million rand. Prepaid expenditure, expenses in respect of the leases, were also overstated by 190 million. Prepaid expenses for the implementing agent was 15 million rand understated, and then the revenue accrual that is recoverable as a result of the leases was overstated by 342 million. We assessed the root cause as being the same, being that the action plans that they had in place to address these weaknesses in how they manage leases have not been properly implemented and monitored. And the recommendations is the same, because if they fix on the one side, it will also assist on the receivable side, and thereby making sure that the action plans are implemented, monitored. Actions are, if they see they're falling behind, that they then course correct and make sure that they implement the correct actions. Look at the population, and then also the monthly reconciliation of leases that will keep the information up to date. Audit of predetermined objectives. As I indicated, for the current year, all the findings were reported under the department. But similarly here, we see that since 2015-16, they have had modified outcomes on the performance information. The information, so it was disclaimers up to 16-17, and then qualifications from 2018-19 up to 2020-21. What we've noted with the predetermined objectives is that there's systems to collect information, to monitor that information, to make sure that the information that the report is valid is not appropriate. And we have found instances where they would have reported, for instance, job opportunities created, but then there will be no supporting evidence to support what they are reporting. Then we would also found that there is evidence, but the information of those jobs created were not included as part of their achievements. And that just shows in terms of the overall process and system of managing performance information is lacking and is not sufficient to make sure that information is accurate, valid, and that when we test it, we can confirm that it is valid. If we look at the compliance to legislation, there is a number of non-compliance that we have identified throughout the years. For both the department and the entity, we've noted that the financial statements were not prepared, and there was, well, for the department, there was material misstatements, and because they've corrected those material misstatements, they were in a position to still get the unqualified opinion. For the trading entity, they didn't prepare the financial statements in terms of the required framework. They didn't correct or couldn't correct the misstatements on the leases, and therefore we did report on the qualification on leases. There's a number of expenditure management findings that we have raised for both the department and the entity. And what we see for the expenditure irregular findings is that for the year, for both the department and the entity, the amount incurred was less than the previous year. So we can see for the department in 2020-21, they've incurred 5 million rand of irregular expenditure compared to 83 million in the previous year. For Bmte, they've incurred 82 million in the 2020-21 financial year, but they've incurred over 340 million in the previous year. However, what we do see is that the closing balances increased, and that is a concern in the sense that we don't see evidence of investigations of consequence management. So the year was less, but it is accumulating, and therefore it's increasing. For the department, the 5 million was relating to appointments that they've made in prior years that was irregular. Those contracts have since came to an end, but there were still payments made in the 2021 financial year, which incurred the 5 million irregular expenditure. Then for PMTE, we did a bit of a breakdown to say that where does the 82 million come from and what is contributing to that. So we've identified that there was approvals that was made outside the delegation, or they didn't get the appropriate delegated authority approval. There was functionality points that was incorrectly scored. So there would be companies that is qualified as a result of that is qualified despite the fact that they've met the functionality points, and then there would be companies that go through in terms of the further processes of appointment which didn't meet the functionality points. We also see that incorrect procurement processes were followed, where either they didn't get the number of quotations that is required, or they didn't follow a proper tender process for amounts more than 500,000. And then we've already spoke about the irregular appointment of officials. So similar to the public works, there was also 3 million rand irregular expenditure for officials that was appointed irregularly. Then we also have non-compliance with the tax requirements, where they were supposed to get proof that the company's tax is in good order, and that was not obtained. So besides the irregular expenditure that was disclosed and reported in their financial statements, there is also a note where there is 1 billion rand, 1.5 billion rand that is currently under investigation and where it's being assessed to determine whether it is irregular expenditure. It is where there was variation orders above 15% of the initial contract amount, and those variations weren't approved by Treasury as required. So they're currently going through the process of getting more information and then to see whether it is then indeed irregular expenditure. For fruitless and wasteful expenditure, we've noted that for both the department and Bmte, they didn't incur any fruitless expenditure for the 2020-21 financial year. However, same concern that we have with the irregular expenditure, the balances year on year remained exactly the same. So there was no movement, meaning the investigations didn't happen as it was supposed to happen. People weren't identified to be held accountable. That money wasn't recovered, and it's just growing. So this year they didn't have a fruitless expenditure, but if there's more fruitless expenditure, we're going to see just a continuous increase in fruitless and wasteful expenditure. So I'm not going to go, okay, so then we have asset management. We also raised the material irregularity where there was a financial loss due to assets not being properly safeguarded. It is a requirement of the accounting officer to make sure that they safeguard assets. And in this instance, we did see that there was an asset that was left unattended, and it resulted in a material financial loss. Then revenue management is linking to the leases, not collecting all money due to them. Consequence management, I spoke to in relation to what we see for irregular expenditure and fruitless and wasteful expenditure, where despite not incurring fruitless expenditure or that much in terms of the irregular expenditure compared to the previous year, we couldn't find evidence that there is investigations in place and that they are following through on the necessary consequence management. I think then we've also raised procurement and contract findings, and that is talking to some of the things I've already mentioned, where quotations weren't obtained, tender processes weren't followed, where the, let me just see, there is minimum qualifying, the functionality criteria, where a person who applied or a company that applied was disqualified despite the fact that they've met the functionality score, and then in the other instance where they didn't meet the minimum qualifying score, but yet they were allowed to go through to the next assessment round. And then we also had findings on local content, where the specifications were not stipulated when they've advertised, and then when the quotations came, those service providers also didn't submit the declaration in terms of the value of the local products that they have in their submission. So from there, I would like to refer to the material irregularities. For public works and Bmte, there is 7 in total. So from the 7, 5 is relating to Bmte and 2 is relating to public works. So for Bmte, we have the Beitbridge and we have 2 in relation to Beitbridge. So the first one for Beitbridge is where we've seen that there wasn't a fair procurement process when they've appointed the service provider to construct the fence. They didn't go out to the market to test whether rates are reasonable, whether it's in line, or if they can even get somebody that is giving the same product at a better price. And as a result of that, when we've tested some of the items and compared to what is in the market, we did identify a likely loss of 17 million rand, where as a result of them not following a fair and open process considering other service providers as well. We are in the assessing management's commitments. We have assessed it as being appropriate. We also know that the SIU is involved and is also assisting in the recovery processes. So we are monitoring those and we are keeping track on those. And currently we still assess it to be in progress. and the commitments to be appropriate. We also, in addition, on the Beitbridge, when we've compared the Bill of Rights compared to the internal memo from the Department of the Services that they've required, we did note that under Bill of Quantities, they included establishment costs, and which should not have been included. So because there wasn't proper monitoring and the review of what was provided by the service provider, it wasn't picked up that this establishment cost should not be paid by the entity. So as a result of that, we've identified 1.1 million rand as a likely loss for the Beitbridge, where there was fees included in terms of the establishment cost that wasn't in line with the Bill of Quantities. We also have Leeuwkop Prison, and this is the one where we refer to in terms of the non-compliance of assets not being safeguarded. There was a service provider that was appointed in 2012 to do work at Leeuwkop. Part of that responsibility was to implement or to install boilers at the prison. The service provider didn't provide the services as required in terms of the timelines that was agreed on, and in 2015 the contract was suspended. In 2016, a new contract service provider was appointed. The new service provider then made an assessment, because these boilers were left on the premises, and they've made an assessment of the condition of those boilers. And because it was left unattended, opened, it wasn't covered up due to the extreme weather conditions, there was erosion to those boilers, and that resulted, according to the assessment done, to a loss of 1.8 million rand. We do say that it remains the responsibility of the accounting officer to make sure that assets are safeguarded. Initially, it was in the first service provider's contract to safeguard the assets, but they abandoned, or they were offside for quite some time, until the contract was then ended in 2015, and then the new service provider being appointed in 2016. So it was almost 5 years that those boilers were standing there unattended, unprotected, and then resulting in this financial loss. We have assessed the accounting officer's response, and we did find it to be appropriate. We will look at the actions. Will then talk to making sure that the control environment improves so that future losses don't incur, that the losses be stopped, that they recover, that they investigate and identify accountability so that they can then recover. And looking at the response and the commitments made by the accounting officer, we did see that all of those required steps have been committed to, and we are monitoring those, and we are assessing those to see whether it is being implemented as committed. We have then also raised a notification, or issued a notification on a lease overpayment. We spoke about it. There is also the qualification on the leases. Similarly, the board or the entity continued to make payments in excess of the agreed amount, and that overpayment resulted in a 10.9 million rand likely financial loss. So we didn't see any initiatives or any action from the entity side to stop the payment, to make efforts to collect that overpayment, and therefore we then raised it as a financial or as a material irregularity, and gave it to the accounting officer to then investigate and to stop the payment and to collect. This is a material irregularity that was issued in the current year, the 2021 financial year. We have received the accounting officer's responses, and similar to the other, based on what we've received, the commitments made by the accounting officer is sufficient. We are then in the process of monitoring those. There was also a construction extension on the Mamelodi Magistrate Court. So there was various instances where there was delays, and there was a request to extend the contract, both in terms of the amount as well as in terms of the planned end date. So the contract specifically stipulates that a contract cannot be extended can be extended in terms of the time, but the amount cannot increase where the delay is a result of strikes and riots. So there was different reasons for the request for extensions, but included in the reasons was also strikes and riots. And yet that was still approved in terms of both extending the period of this contract, but also increasing the amount. So we've therefore raised it as a financial loss of 3 million. And the reason why we stated that is because the person who was delegated to sign that contract had to make sure that the conditions of the contract is being met. And that wasn't done, because if there was proper review of the contract conditions compared to the request for extension, the person would have identified that it's outside the requirements of the Act and then could have prevented that loss. And that was approved and also paid. So the 3 million was already paid. There is 2 material irregularities for the department. The one is on state funerals, where we've noted that there was contract agreements for 2 years. There was a specific requirement from the service provider that the amount be fixed for the different items that they would provide. And when we've audited it, we did note that they didn't always pay according to that tariffs. They would have paid more. And there was also sometimes instances of items that has been added that was not necessarily included in the agreement. And that resulted in an overpayment of 8 million. We know that that is being investigated and there is internal processes around that. So for that one, even though it was raised in 2019-20, we are assessing it, we are monitoring it, and the actions committed to is currently still in progress and still sufficient. The one where we did the follow-up and where we initially said the accounting officer's response is sufficient, but through our follow-up and monitoring, we've realized that those commitments are not acted on, is the material irregularity that we've raised in terms of the state events. So it's a similar case like the state funerals, where they would arrange state events for other countries, visits to the summits that is being held by South Africa. And similarly to the state funerals, we've seen that amounts would be in excess to what they would have agreed to, and we would see that they would claim for items that is not necessarily part of the agreement. So that was a loss of 825,000 rand. As I say, when we followed up on the commitments, we did note that the commitments is not necessarily implemented. We couldn't find any evidence that the investigation that was committed to has commenced. And therefore, we then went in terms of our process to the next step to say, we've allowed the accounting officer the opportunity to implement the commitments that he made. In the absence of evidence of that, our next step is then to make recommendations that is binding, and those recommendations were included in the 2020-21 audit report. And we are in the process of then evaluating. We've received the accounting officer's responses a week back. So it's recent that we've received the responses back on those recommendations, and we are currently in the process of evaluating those. Those are the material irregularities that we've raised for both the department and Bmte. I think throughout we were talking about the drivers of the internal control, which is also then the root causes. And I think what is then standing out is in terms of the leadership, effective leadership culture, and the oversight responsibility. We always talk about the tone from the top and the culture that is being set by leadership, a culture of having controls in place, preventative controls in place, making sure that there's corrective actions, that there is monitoring, that where there is irregular expenditure, there is investigations, there's follow-up, there is people that is being held accountable. And we didn't necessarily see that. And I think it's being supported by the qualification. It's supported by the performance information outcome. It is supported in terms of the non-compliance that we've identified, where we noted that the monitoring, the making sure that action plans is being executed, implemented, that is not in place. And that is then the main reason for the root cause for them being in this position where outcomes has stagnated. We have made recommendations to the accounting officer. So those recommendations would be in terms of making sure that they monitor and review the controls around the leases, that they enhance the controls, monitoring over internal audit, that internal audit also play a role in terms of performance information. The entity is not always keen to include internal audit, but we do believe, and our message is always to say that this remains management's responsibility to make sure the information that is reported on performance information is accurate and complete. And therefore, to assist management, it is advised that maybe internal audit can do some reviews to give management that assurance that the information is accurate. Alternatively, any other monitoring process can be included, but it remains management's responsibility to make sure that they do monitor the information, they validate the information, and what they include in their performance report, they can substantiate with the necessary supporting evidence. And then obviously we have made comments in terms of consequence management, where it is critical for the department to be more deliberate in their actions, in their consequence management actions. We've seen it in irregular expenditure, we've seen it in fruitless and wasteful expenditure, we see it in the material irregularity that we now have included recommendations in the audit report, that is an area that really needs some attention. If we then look at, for the committee, we've just mentioned to say the resolutions, but to be a bit more specific, it's to look at the action plans. If the action plans by the department is not being monitored, is to follow through and get feedback on how those action plans are being implemented. And then there was a number of commitments from the minister that is talking to holding people accountable, getting detailed analysis of the leases. And for the committee, it will also be beneficial to monitor those commitments made by the minister that will drive a better audit outcome and that will drive accountability within the department and the entity. Chairperson, just before I conclude, we did do some work on the sectors. And specifically, we had some messages in our general report on leases. So if the committee will allow me, I'll just quickly focus on those public works sector messages that we've raised. So first of all, we've seen that in the sector, the same outcome is there, that the outcomes remain unchanged. So there's also a message of stagnation in terms of the outcomes. The Western Cape was unqualified with no findings, and then we had Bmte and Northwest that remained qualified over a number of years. So some of our key messages, and I'll start with the budget. What we see with the budget is that the budget is not focused on maintenance. Looking at the entire sector's budget, we see that less than 20% of the sector's budget is allocated for maintenance. Then we have like 36% on infrastructure, which is the new buildings, and 37% on leases. So with the budget is driving an over-reliance on leases and less focus on maintaining buildings, making sure it is safe for use and that it is being maintained throughout. So that is the first concern that we've identified, and it is something that we've recommended to the sector and to the minister is to say there must really be a real look at the budget to make sure that it drives what the PMTE is responsible for or the sector is responsible for, and making sure that there is less reliance on leases. We have seen that there is a number of projects that is significantly delayed. And if we speak about significantly, it's more than 2 years. There is like 120 projects that is PMTE is responsible for that is delayed for more than 2 years. And within the provinces, there is 146 projects that is delayed. I think we all know and have heard about the Northern Cape Mental Health Hospital. It's been delayed for more than 14 years. It is now been concluded, but it's one of those projects that just continued, scope changes, increase in prices, and as a result, the service and the benefit of that building didn't get to finalization so that the citizens can benefit from a project like that institution. In terms of maintenance, we do see that there's a number of buildings that is being categorized as unfit for use. So they look at the condition, and when the condition is 20% or less, the building is being classified as unfit for use. We do see that for PMTE, despite the fact that some buildings are classified as unfit for use, 1,440 of those buildings are still being used by user departments. In Limpopo, there is 275 buildings with a rating of less than 20% that is still in use. I mean, that is just a risk to the people that must use those facilities where it's really unfit, unsafe for use. We did note that in some instances it is schools that is being categorized in that category, and yet they are being used. We've noted that there is a number of unoccupied buildings which is fit for use, but then isn't used by PMTE and within the provinces. So, and then they go into leases. So we've seen that there is 1,239 buildings that is fit for use, and then we see that there is 2,300 leases that is being paid on a monthly basis. So some of the reasons is that those buildings, although it's safe to use, doesn't meet the user department's needs, and therefore it is not used. The department do, however, have a strategy to say that they need to lease out those buildings, but it's not something that is being actively pursued, and we don't really see that those unoccupied buildings is being leased out. And then we've also seen that there is a number of month-to-month leases. So they would continue, contracts will come to an end, and then there will just be an extension of that lease contract on a month-to-month basis. We have seen the Alexkor building has been on a month-to-month for 17 years. The impact of that is that they continue to increase annually the lease amount of 10%, whereas there's an approved rate of an increase of 5%. So if they enter into a new contract, they can bind and sign on the 5%. But now with the old contract in place, being extended on a month-to-month basis, they actually pay much more than they would have if they would have just entered into a new contract. So it's actually money that would have been spent and used much better, and it's enriching somebody else. Whereas they do have buildings that they can maybe occupy themselves. Whereas if they pay what they are supposed to pay in terms of the agreed rates, then there will be more money left in terms of also to spend on, for instance, maintenance. So it is something that in terms of the commitments from the minister's side, there was a person that was appointed to then specifically do a review of the contracts, of the current contracts, and then also identifying overpayments, month-to-month leases, so that that can be corrected. Honourable Chair, thank you so much. I think that is the end of my presentation. We will then open up for questions. Thank you.
Thank you very much for that presentation. From the AG's side, it's really quite detailed and extensive. It deals with matters which affect the current conditions, mainly on the property side is owned by government and the ability to maintain such and to budget appropriately for sustainability of such buildings. Is there anyone who would want to speak on the matters raised by the Auditor General? Honorable Lias. Honorable Lias. Yes,
Thank you, Mr. Chairman. Just there was quite a lot of detail right towards the end of the presentation, which I didn't see in the document. Is it possible to get that detail? There were lots of numbers and so on. I'd really appreciate if we could get it, or perhaps I'm missing it somewhere in the document. That's the one point. And then the question, there seems to be a real concern around the ability of either the department or the entity to safeguard assets. So my question really is that concern, when was it raised with, or was it raised with the department and with the entity? Because my concern is that one of the prime assets for the country partially burnt down a month ago. And so we have an example now of an asset which clearly wasn't properly safeguarded. And so I'm just trying to sort of establish when this concern was raised by you as the AG with the department. And then the question of the Beitbridge border fence, you've looked at the losses that have been incurred there. Again, in terms of safeguarding, my understanding is when we visited that debacle nearly 2 years ago now, I think, if I'm correct, there were already multiple holes through the fence, and the asset was clearly not being protected. And I suspect that if we were to make another visit now, there would be very little left of that fence. Is that the responsibility of the department or the entity, or is that someone else's responsibility in terms of safeguarding that asset? Thanks, Mr. Chairman.
Chairperson, can I continue?
Can continue. I was just checking whether is there anyone else who would want to speak. Looks like yes, only Honorable Yes. We'll continue.
Thank you very much. So in terms of the detail, it is included in our general report that we've issued towards the end of last year. So I will we can arrange to get a copy of that report to the committee, so that the detail is then also available. In terms of the safeguarding, I think I'm going to ask my team just to respond to this. So this were reported as a non-compliance to the department, and I'm referring to the one instance that resulted in a material irregularity, but there would have been other instances as well. So the non-compliance would have been communicated to the department and to the entity. So maybe Apenduli, if I can ask you, maybe just when was that communication issued, if you are familiar with that detail? And then the department and the accounting officer will be responsible to safeguard assets, that is under his control, and that is in the PMTE's asset register. So the fence, in my understanding, but I will be supported by my team as well. The fence, in my understanding, is that of the fence, the Department of Defense, and not necessarily the asset of the property of Bmte. And therefore, once they've constructed it, it would then go over to where it is, where the responsibility lies. But Apanduli, maybe if I can hand over to you just to indicate when did we issue, findings in terms of safeguarding of assets, and then just also confirmation on the safeguarding of the fence. Thank you.
Thank you, Corne, but I'd like to first give an opportunity to Siabonga to comment on the matters raised, and then I'll also add my contributions. Thanks.
Thank you, Apendule. Good morning, colleagues. My name is Siabonga. Maybe just to respond on the question raised, in previous audit, we've raised a concern on the safeguarding of bowlers, which is one of the MI that was raised as my business executive has presented to say in one of the local prisons, we had some of the assets that were supposed to be safeguarded during the construction phase. However, they were left not attended, which resulted then in a material irregularity raised. So there was a finding of that nature which was raised, which resulted in a material irregularity. And then in terms of the bed breach fence, through the engagement, when we raised an issue or rather an MI on it, the issue of safeguarding defense came about where then it was seen that department the defense the Department of Defense, since they are there, sort of the soldiers which are there on the ground will be looking to safeguard those fences. However, that project was handled by PMTE, since PMTE, they are the one responsible to they are the custodian of the fences, and it's recorded in their books. However, then the safeguarding of it was a responsibility of the defense in that case. However, all the properties that are within the control of PMTE, they are responsible to safeguard those assets. For example, the parliament, it should be the responsibility of PMTE to safeguard those. So they should be within their control. Thank you.
Thank you, Chairperson. Just maybe to be direct as to when the issue of safeguarding of assets was communicated. It was communicated during the 2021 audit period, and subsequently we then assessed it for material irregularity requirements, and after which we then issued the notification. Thank you, Chairperson.
Okay. Honorable Liestu, are you satisfied?
Not entirely, Mr. Chairman. So let's just deal with the notification on safeguarding assets. So that was during the 2021 audit, and that I understood already, but I'm looking for an approximate date. When were those? When was the management letter issued with that in it, or when did such a meeting occur? Was it 6 months ago? Just give us some indication there, please. Be more specific. And then there's some obfuscation taking place here about the responsibility for the fence. As the AG, I would like you please to be more specific. If you're saying that the Department of Defense was responsible, on what basis are you saying that? Was there a formal agreement between the department or the entity and the Department of Defense? And have you seen such an agreement? Or are you just taking the word of some officials in the department? On what basis are you claiming that the soldiers were and are responsible for safeguarding the fence?
Okay, AG Jim?
Thank you, Chairperson. So in terms of the finding that was issued, I don't have in front of me the date when the actual finding would have been issued, but we signed the audit report around end of October, and we would have then issued the management report during the same time. So the management report end of October, I don't know if the team has had a look at the date of the actual finding, but it would have been prior to that finding then would have been issued. Can I ask Sia if he can just respond in terms of whether there was evidence in terms of the agreement between Defence and Bmte, whether that was part of the review. But what I do want to confirm is the fact that what is within the Bmte's asset register, they are responsible for. So if Defence is included in their asset register, they will ultimately remain responsible to make sure that they monitor, if there's an agreement, that they still monitor that that agreement is being adhered to. Sia, maybe if you can just indicate whether you do have a date of the COF, and then if you've seen the agreement in writing between Defence and Bmte.
Thank you. In terms of the actual findings, even though I might not have the exact date, so when was it raised, but I can confirm that initially the finding was raised in 2020. I'll try to get the actual date where this issue was initially raised, and then in the 2021 financial period, that's where then the follow-up was made relating to the to this finding, and then we ended up communicated formally in the management report of 2021 as our business executive indicated that it was issued in September. But in terms of the actual dates of the COF, we'll have to get back and get the actual dates. But it was raised as early as possible, because from the 2020 financial period, the conversation around this issue was already taking place, where we had to follow up until it becomes a material irregularity. And in terms of the defense, we haven't sort of have a document which will then stipulate exactly to say the bed bridge fence, it's the responsibility of the defense. So we don't have anything in writing that we can present currently. I will just get back to the business executive. Thank you.
Do you want to add anything?
Sorry, Chairperson. Yeah, maybe with your indulgence, can we come back to you? I mean, let us just go back to the actual date of the communication or finding that was issued, and then we can also just follow up in terms of the agreement that was referred to. So if I can ask your indulgence that we then come back to you with the copy of the general report that I referred to, as well as the date of the letter that was issued, and then the confirmation of whether it is in writing, the agreement between the department and the Department of Defence. Thanks.
That's it. Are you happy with that, colleagues?
Thank you, Mr. Chairman.
Is there any other person, colleagues, who want to speak on these matters? It's left with us to read more on those matters. I think honorable lists have raised the relevance of this report in terms of the assets of the state and their condition currently as to how they are covered in terms of the departmental plan for maintenance and the lease conditions, the contractual relations, and all those matters are of interest as raised by the this current audit. I think next presentation.
Thank you, Honorable Chairperson. Honorable Chairperson, the next presentation will then be for the compensation fund. My colleagues from our business unit dealing with the audit of the compensation fund are also in the room. I'm going to introduce the team. I think they are led by Ms. Michelle Margaman. They will then also articulate Ms. Kabo Kumape is also here, who is the business unit leader for that particular portfolio that takes care of the labor portfolio in its entirety. Honorable Chair, members, I'm going to hand over to Kabo, who will do the introductory remarks, and then as well as directors in terms of who will do the presentation. With your permission and indulgence, Chairperson, over to you, Kabo.
Thank you so much, Honorable Chairperson. I think the last presentation from the AGSA will be the compensation fund. But before we get to it, I just thought maybe let me just touch a bit on the UIF. The UIF is not yet finalized. They submitted financial statements way after the compensation fund. So they came on the 30th of September. We've done the work. We've issued a draft report yesterday to them. So what is left is for the last finalization of the audit. But I just wanted to highlight that one of the biggest challenge we encountered in the UIF would have been the 57 billion of the TARES. I think it came as a big quantum to deal with for us. And we end up having to go to some of the companies just to try and follow up the nitty-gritty of where the money would have went. And I think once the audit is finalized, we would come back to the committee and just share in terms of what we found. You remember that we issued first special report, and the second special report on the TARES. And therefore, this audit was primarily trying to network all of those two reports and make sure that we follow up on all of those key elements that we put on the table as red flags at that point in time, if those red flags materialized or not. So that would be the UIF. So it should be finalized by end of February as it stands. I think we're good to go along those lines. For the compensation fund, Chair, again, I think just to highlight, we disclaimed them for the financial year 2020-2021, which would make the 9th year of them getting the disclaimer of opinion. And you remember before the commencement of this 9 years, so they would have had 2 years of adverse audit opinion preceding that period as well. So we are extremely worried about the compensation fund. Yes, we engaged the leadership of the fund, including the leadership of the department, around our concerns, but we also put them on we phase them in as part of the material irregularity, and then we could highlight some of the material losses that they encountered just due to the process not being in place. You would see that the messages that we've been putting on the table for the past 8 years or 9 years, some of those things are still coming through, if not majority of them. And I think the biggest challenge with the fund is just the transparency of reporting, the ability to retrieve information, data, the ability to reconcile, and therefore make sure that the finances and the financial management of the fund is transparently dealt with. And I think that's one of the biggest things that our teams had to deal with. So with your permission, Chair, if I may just pause there and allow Michelle just to take us through the presentation, then we'll come back again and just appreciate some of the members' comments or questions, if any. Thank you, Chair, with your permission. Go ahead, Michelle.
Thank you. Thank you, Kabo. Good morning, Honorable Chair. Good morning, Honorable members. I am going to take you through the compensation fund presentation. I hope that it is visible. I did try and make it quite big so that you are able to follow through. The first few pages, I have included a brief overview of the operations of the compensation fund, so that as I go through the presentation, you also appreciate the different areas of business that some of these findings that we're raising are impacting. And when I come to the root causes, we will be able to see that although we are expressing accounting terminology,
but it really is about how operation is functioning and how important it is that all role players within the compensation fund do their roles and do their data responsibilities as it is reflecting eventually on the outcomes of the compensation fund. I've also included some of the benefits that the compensation fund provides for claimants, just for also your indulgence. I do have the audit opinion history. As was already indicated, it's been a disclaimer for many years. And noting that a disclaimer means that you could not provide sufficient appropriate evidence for many of the accounts that are disclosed in the financial statements. I've also included a disclaimer journey history. You can see from 2017 right up until now, 2021, that we have quite a few items in the financial statements that have been qualified in terms of not getting appropriate audit evidence. Committee and chairperson, I've included a summary of the audit report paragraphs as well, so that you are able to track the paragraph to the explanation. So that the items that are in italics is from the audit report. What I will be talking to is where the numbering is, where it gives a summarized indication of what exactly is the audit report paragraph stating. So if you look at revenue, I'll just go up a bit. Revenue from non-exchange transactions and statutory receivables. Here, it's mainly on the employers, how the employers register on the compensation fund, how the employers are assessed, and how then they are followed up to make sure that the compensation fund receives money. And unfortunately, we were unable to get a supporting documentation for the employers that have submitted their returns. It is critical that we get the supporting documentation to determine the nature of business of the employer, to determine the earnings of the employer, and to determine when the employer started or if the employer exists, for us to then recalculate whether the amount that is disclosed by the fund is complete and accurate. And unfortunately, we were not able to get some of the documentation that we requested. On the other hand, we also looked at whether the compensation fund is invoicing all the employers, or if they're checking that all the employers have submitted the return on earnings so that they're able to charge. And we realized that some of the employers that are registered on the compensation fund has not necessarily provided the compensation fund with the return on earnings. And also they have not been assessed as an estimate so that they can be charged at the correct rate and classes. We also noted that in the financials themselves or in the general ledger, that where an employer now 2 years later comes and submits information and you recalculate the return on earnings, it is important that if the earning relates to the prior year, it needs to be charged in terms of the accounting framework in that prior year, and if it's in the current year, and we noticed some errors in that regard. So in terms of the employer contributions and how employers are being assessed, we are seeing that this whole process is not necessarily as adequate as it should be, and mainly it's because of getting the return on earnings, making sure that you're classifying the employers correctly, making sure that you're charging them correctly, and having that filing system where you can be able to retrieve that information when it is required so that it is being able to be verified. In terms of benefits, here for benefits, we could not get a listing for all the claims that were paid that agrees to the financial statements. So yes, we can extract from the system. They can give us some listing, but we're unable to reconcile that. That makes it not possible to even audit, because you cannot even rely on the listing that is provided. Further to that, the fund is required to also provide for future claims that can be claimed in the future. So you need to almost estimate your future liability. And unfortunately, the figures that were utilized to calculate this provision, we could not also rely on it. The figures had quite a few deficiencies in them. So the data that you need to determine your trends, to say that in the future, this is how much I'll possibly claim, looking at the trends of the past or looking at some estimations that can come through, we could not get that. That data had quite a lot of deficiencies that limited us from being able to conclude that it is reliable. In terms of payables, payables are very similar to the claims as well. Some of the supporting documentations could not be provided. There were data there with credit balances that we needed to verify to make sure that, yes, you do owe the data. Now they're sitting with a credit balance, but we could not necessarily recalculate that and get the supporting documentation. For investments, very similar to prior years. For investments, we could not get appropriate audit evidence to validate data to perform the valuations. And some of the unlisted investments are preparing in different financial frameworks. So they're using IFRS, the CF is using GRAP. And therefore, there needs to be a reconciliation or some kind of way to convert that information from the different framework into the GRAP standards, so that it can be easily brought into the financial statements. The fund also doesn't have processes, so some of the associates brought their management accounts. But for you to rely on those management accounts, there must be processes to make sure that whatever it is that your investors are giving you, it is complete and accurate. Yes, that you can get your audited financial statements that we did not receive. Where we are getting management accounts from the investors, we need to make sure that that information is complete and accurate, so that we can then rely on the figures that are there. And unfortunately, we could not get all that information. In terms of the prior period error, if you look at our opinion, the history, we've had the disclaimer opinions for quite a number of years. Therefore, it is important that all of the errors that we have found in the prior years, they do get corrected in the current year. Unfortunately, for quite a number of those areas that we had disclaimed in the prior years, we did not get supporting information to support that these errors were then corrected. In terms of your contingencies, this is where you record that you've got any legal claims or lawsuits that are against the fund. We could not get appropriate evidence to support some of the contingencies that are there. Some of the contingencies were not even disclosed correctly. Some of the contingencies were already supposed to be paid. And we could not see that move from a contingency into a liability. And in some instances, most instances, we could not get the information to substantiate some of the legal claims there are against the compensation fund. In terms of irregular and fruitless and wasteful expenditure, there is an opening balance on the irregular and fruitless and wasteful expenditure. However, in some of those cases, we could not get information to substantiate those irregular expenditure. Most of the information there, the fund, because of the record keeping that they have, they cannot give us some of the evidence to show that the irregular expenditure is being dealt with and what is supporting that irregular expenditure. In terms of the cash flow statement, we also noted differences in the calculation in the cash flow statement. There was various errors in the cash flow statement calculation where non-cash items were also included, and the re-performance of the cash flow statement just had quite a number of differences. Risk management, what is required here is that we are supposed to disclose in terms of the GRAP standards, your sensitivity in terms of some of your financial instruments, for example, your debtors, to say how sensitive are they, what is your risk in terms of credit, We had quite a few errors in that in terms of what is sitting in the financial statements, what is sitting in the records, how are you assessing your sensitivity, and what is ultimately being disclosed in this disclosure notes for risk management. In terms of the principal-agent relationship, the fund did not disclose the PIC as a principal-agent relationship, even though the PIC is acting on behalf of the fund in terms of the investments. In terms of related parties, we also had quite a number of differences between what the Department of Employment and Labor is saying that the transactions within with the compensation fund and what the compensation fund has. So where the department is paying, for example, salaries on behalf of the fund, this related party transaction needs to be disclosed. However, getting to the right amount and the support for that, we could not obtain from the fund. In terms of predetermined objectives, we've had findings throughout the years. For the current financial year, we audited the program 3, which mainly talks up to your medical invoices, your pre-authorizations, and your high value and complex cases. For this indicator, in the main, we could not get supporting documentation for some of the areas that we requested information from. If you look at the medical invoices, here it talks about 60 days of receipt of medical invoices. When we went back into the system and we asked for information, some of the information was dated even after year end, and therefore we could not recalculate the 60 working days in order for us to be comfortable with what the fund is reporting. In terms of pre-authorization, this is very similar to the medical invoices to say when is this pre-authorization received, and when is it finalized within the 10 working days. Some of these are emails that are correspondence between the fund and the hospitals and the medical service providers. So it is very important that there is a diligent process that is implemented from the provincial offices right up until the head office to make sure that what is being received is recorded somewhere, it is filed somewhere. If somebody puts in that they've received on a specific date, there is a process in place for anyone else to come in and follow to say, if you say that this is within 10 working days, when did you receive it? When did you authorize it? And how is that resulting in the performance reporting? Similarly to the high value and complex cases, it is very important that the correspondence from the hospitals is received so that you are able to say that this is a high value and complex case and provide that audit evidence, and then also show that it is done within the 7 working days. And that information, when we received it, it's either it was not received at all, or when we received it, we could not necessarily recalculate the days that are supposedly being reported. And we are talking about the root causes to say that the poor record keeping is within the fund. Not all the role players are keeping the supporting documentation. Not all the role players are reviewing the reported achievements to ensure that there are supporting evidence and schedules. And we are saying that there must be an alignment process between what is supporting and the reporting of the annual performance report. And these management must review the annual performance report, and they must review it against the supporting documentation so that they can be able to prevent and detect any errors before they submit the annual performance report for audit. In terms of compliance with legislation, so all the findings in terms of the performance information and the financial statements also result in the non-compliance with the PFMA. And the first one is on the financial statements, that the financial statements had various material misstatements that were identified. In terms of expenditure management, we did identify, and I'll come to the irregular, fruitless, and wasteful in the presentation still, where we did identify some irregular expenditure, which was mainly caused by non-compliance with the Treasury regulations, as well as fruitless and wasteful expenditure, where there was interest and late payments, as well as share costs and legal costs, mainly and wasteful expenditure because of the public entity not being utilized economically. In terms of consequence management, there's quite a number of cases currently in progress. These cases, they're still in progress, so we're not seeing them being finalized. And we are saying that these need to be finalized and we need the support. So some of them, where they say they are doing consequence management, where we do ask for information, we are not getting the support, the appropriate audit evidence to substantiate what it is that is being done in terms of consequence management. Revenue management, this primarily talks to the charging of the employers and making sure that you collect your revenue. So whether employers have not submitted the return on earnings and you are estimating, it is critical and it is required that these the fund goes and make sure that they collect this revenue. Procurement and contract management, we did identify 2 contracts that were extended without approval, appropriate approval, and then we also have payments exceeding the contract value amounting to 3 million. So just on the irregular expenditure, if I go down, so that we did see payments for about 3 contracts. It's your IT contract and your paper. Your printing paper, those contracts where they exceeded the contract value. And also in the prior years, there was a contract that was cancelled, and the reason for cancelling was not necessarily provided, and this contract resulted in an irregular expenditure. The fruitless and wasteful expenditure, this mainly is, and I think this is, you'll see when I do the material irregularity, this is a big amount because of the interest. If you don't do your medical service providers, the hospitals, they will charge you interest because they are waiting for their money, they've invoiced you. And if you are not reconciling your claims properly, if you're not reconciling your claim against what you already paid, and therefore you miss paying the invoices, usually your service providers will charge you interest and they will take it to court, therefore resulting in you getting the fruitless and wasteful expenditure, because you should have avoided this if your processes were in place. Coming to the material irregularities, we raised 2 material irregularities. So the fund is implementing the MI. We are continuing with the implementation of the MI process. We raised 2 material irregularities. The first one was COMSOL, who instituted legal action against the fund, as the fund did not pay some of the invoices. And even after the fund was provided 75 days to pay the invoice, they still could not reconcile and make sure that COMSOL gets paid. So we issued that material irregularity due to the interest that was charged. There was also duplicate payment that was made to one of the hospitals. And in this instance, although the hospital has agreed to pay back the duplicate payment, we did raise on the amount that is outstanding. So not the full amount has been paid back to the fund. We've issued the MI. The investigation is said to be finalized on the 31st of March by the accounting authority. So we will follow up when that date comes, and then we will then be able to report on whether we are comfortable with the action that was taken or not taken, and then we'll take the MI process forward depending on the outcome and the conclusions that come from there. In terms of the internal control deficiencies, so if you look at the compensation fund, all the main areas in terms of internal controls, what should be there, we did give a red. And we are saying that in all the key areas of making sure that the financial statements and performance reports are complete and accurate, there needs to be improvement. And internal controls cannot necessarily function if even in the background you don't have a control environment that is making sure that everybody's doing their job properly. So your performance management and your accountability framework should be working with you when you're implementing your internal controls as well. So if you look at the internal controls, we're talking about leadership. Here we're saying that leadership did not ensure that there's effective preventative and detective controls in place to enable reliable reporting and compliance with the legislation, as well as the preventative controls when preparing financial statements. Action plans were not monitored, they were not effective. We've had recurring findings over the years. And then proper record keeping, which is a key one. There must be a process in place for record keeping, especially in an environment where support from hospitals is key. Support to make sure employers are registering and they're registering the correct information. That is key. So your record keeping processes needs to be in place, and there needs to be a proper system that everybody is following. And then also making sure that when you're preparing your performance reports and your financial statements, that they are being reviewed, they are accurate and complete. Daily and monthly processing and reconciliations, these are key. Looking at the amount of invoices, claims that are coming through and invoices that are being paid. This is very key process within the daily processes of the fund, where reconciliations should be done on a continuous basis, and they must be reviewed. Compliance monitoring, making sure that you comply with the relevant legislation. This was not adequate at all. Internal audit committee. We are saying that the information that is being submitted to audit committee is not accurate. So management must make sure that they check the information that is submitted, so that internal audit and audit committee is effective. And then for the fund specifically, for about 4 months of the year, there was no audit committee in place. For the better half of the year, yes, there was, but quite a few months in the beginning, there was no audit committee. So we met with the fund, with the minister, with the leadership, and we are saying that there is still an urgent need for the fund to review its control environment, including the role of management, and also to strengthen this preventative and monitoring controls and identify deficiencies early and react appropriately. So there's definitely still that need. We did communicate it even in the prior years. We're saying, oh, you need to go in and identify what it is that needs to be done in terms of the control environment, making sure that everybody does their job. Monitoring and adherence to controls must be enforced. So yes, you will go and you will relook at your control environment, but it needs to be on the basis that it's monitored. There's performance management, where there are transgressions, these are acted on timelessly and responded, and the root cause is responded to timelessly as well. And then implement the controls for reviewing reviewing. So once you've got the control environment, what processes are there, you need to determine which review processes must happen. Your internal audit as well comes in. Your leaderships management must review all the reports that they're signing off on. And definitely consequence management, where there's transgressions, you need to make sure that those consequence managements take place. Key recommendations to the committee. So for the committee side, we are suggesting that you obtain the detailed report from the compensation fund on the review of the control environment, and also for the committee to obtain the investigation reports to confirm whether the investigations have been conducted. Has the root cause been addressed? Employees that cause these irregularities are identified and action is taken against them. And where the fund has incurred financial loss, is that financial loss recovered? And then monitor the consequence management is implemented to transgressions. And that is my story on the compensation fund, and also the recommendations in terms of how we can see this fund moving forward even after 5 years of a disclaimer. Thank you, Chair. I'm not sure if Khabo would like to come in, but I'll hand over back to Khabo if there's any closing remarks. Thank you so much.
Thank you so much. I think, Chair, maybe just to highlight one key issue. The compensation fund is not benefiting from the governance structures. They're not benefiting from the audit committee. They're not benefiting from the internal audit, and simply because they're not providing those committees with complete information to facilitate the proper analysis, and then they get the recommendations. If you look at the internal audit reports, they have a lot of limitations of scope, and that just makes it impossible for that particular unit to then effectively add value to the fund. And I think that's one of the things that we keep highlighting to them, that it would not necessarily benefit you to have these particular units and these particular governance structures if you're not going to provide them with all the documents they require to support the fund and make sure that they also hold you accountable in terms of some of the commitments that you may have made. But we'll pause here, Chair, and just then get the reaction from the committee. Thank you so much for the opportunity.
Okay, Babusame, thank you very much for holding the fort for me. I really appreciate that. Right, colleagues, there's the horror story of the compensation fund. Okay, colleagues, Honorable Liz, over to you. I see your hand.
Thanks, Mr. Chairman, and thank you, John Somia, for standing in for you whilst you go off to have a nap, but nice to have you back. I don't actually know where...
Nice. Okay, well.
We need a sense of humour, Mr. Chairman, when it comes to entities such as the compensation fund. Essentially, I mean, the AG is the messenger, and so I'm not in any way casting aspersions about the AG, but essentially the financial report is not worth the paper it's written on. I mean, there is nothing, it appears, that the AG can really say, these are the facts. Starting with the system. I don't know how many of you have ever tried to do returns and so on their system. It's a nightmare. And they don't even send out notices to say, your return's due. So I suspect there are many innocent employers out there who just have forgotten, and the years go by and they never do returns and they never pay the money that they should be paying. Anyway, it's a mess. But one of the issues, Mr. Chairman, where perhaps the AG can give me some insight. The AG's already said that the investments is a mess, but it's incredible that the PIC is not even mentioned, and we know the mess the PIC is in with regard to very, very bad investments in AO and so-called independent media and so on. Is it possible, this is now the question finally after my little rant, is it possible that investments have actually been made and lost, should be written off, have been stolen by the people who've been given money to invest, and there's no record of it. It appears on the books as if it's still a safe investment. Is it possible that sums of money, large or small, have just disappeared in the investments and we don't know about it? Thanks, Mr. Chairman.
Okay, thanks, Honorable Liz. Are there any other hands or comments from colleagues? Right, let's get a response to that. Right, AJ?
Thank you so much, Chair. Maybe let me start by just categorizing the investment that the compensation fund have with the PIC. So ordinarily, they'll have two big categories. So they'll have the listed investments and they'll have unlisted investments. And really, the listed investment will be those that they make in the listed companies. So there we don't have a problem. It's pretty much easier to even follow through the money along those lines. The biggest problem we are sitting with is on unlisted stock, on unlisted investments, because it's really hard to try and get any other confirmation independently on the market in terms of whether that investment is still worth the money that they would have initially deposited. I wouldn't necessarily comment on whether the money would have been stolen, but what we know is that the compensation fund is struggling to comfortably say, yes, I paid, let's argue 40 million into this particular company, and I can raise my hand and say this is how much it's worth. We see a lot of impairments come in, meaning in some instances, some of these particular unlisted companies, they're coming back and say, look, the value had gone down and therefore they needed to be written down. Right? In terms of what would have triggered all of those things, then the underlying documents that we are saying, you do not necessarily verify the accuracy of what the investee is giving you. And therefore, you will struggle to even know for real in terms of how much is this investment worth at the point in time. But I would not necessarily comment on whether the money would have been stolen or otherwise. But we do know that impairment write-down definitely is happening. And the ability to confirm those figures, it's the biggest challenge that they're sitting with. And that's some of the things that we recommended to them. We said, tighten your SLA, your agreement with PIC. Find the in-year monitoring. So don't wait until it's year end to try and get a set of financial statements, a set of management accounts from this particular entity, but make sure that as and when the year goes by, you have the means of testing whether your money is growing or your money is actually losing value, and make an informed decision, or at least check that the PIC is making informed decisions along your funds. Thank you, Chair.
Okay, Honorable Liz, are you good with that? Thanks, Ms. Khaba.
Thanks, Mr. Chairman.
Okay, colleagues, are there any further questions? Yeah, I think, Honorable Liz, you are right. The AG is just a messenger and unfortunately today they bring us very bad news, but the state of affairs of the compensation fund has been in the making for the longest of time, and in the absence of consequences is going to prevail. I still do not understand why the commissioner and the executives who have presided over this collapse and implosion continue to be in their positions. You know, these are the people in whose hands this crisis is manifested, and yet they continue to be in office. This is a horror story of 10 years. And they just don't listen. Recommendation upon recommendation, because I do recall that the previous COPA, this fifth parliament, even visited the compensation fund. These people are just plainly hard-headed and are comfortable in creating a crisis for a disclaimer which enables the kind of rotten corruption which is at play to take place. And I dare say they do so because most likely they are beneficiaries of that corruption. So they really need to explain to us why they should continue being in office. And the minister must really explain to us when it does appear why these people remain in office and why they should remain in office if they are going to remain in office. Unless we take a tough stand on the compensation fund, this kind of rot is going to continue. And it's really just deliberate. I don't understand an entity being disclaimed for 10 years and they're quite comfortable with it. For lack of a better conclusion in terms of what is going on. But yeah, they are scheduled to appear before us. And so quite frankly, they really have got some very serious questions to answer to. But as far as I see it, those people in the compensation fund are not fit for purpose. They are not worthy to occupy the office that they occupy. And so they just, as far as I see it, have got to go. And yeah. Anyway, Babu Ulis, I see your hand.
Just quickly, Mr. Chairman, it's not for the AG, but can we ask the Compensation Commission to give us a detailed report of all their investments before they come before us? In other words, both listed and unlisted. Can we have such a report, please?
Okay, Sister Putman, please put that down and we'll send it through to the compensation fund so that when they appear, they are prepared for it. The compensation fund is due to appear before us next week, Sister Mbi, right? Next week, Tuesday.
Wednesday, Chairperson.
Yeah, Wednesday, yes. The minister has written a letter indicating that he is in Botswana on that day, on the day of the scheduled meeting, and was requesting that the meeting be postponed for a day when he will be available. So I think colleagues just do send your thoughts. I'll send the letter through on our side office, and just do send through your comments on that so that we can make a determination. But he was of the opinion that he wants to appear, and that the day which we had put in our program, he will be in Botswana. I think there is a labor ministers forum that's taking place, and he'll be out of the country. So we'll send that. Please put that letter to members, and then we'll just make a determination about it. Right, let me take this opportunity then to thank the AG for the presentations which they've given us this morning. Andres Sishabo, Saki, Baning, Pendule, Siabonga, Kone, Michelle, Almal and Almal, Andrea, yeah, if I don't mention you, I will mention you under the very prestigious auspices of all protocol is observed. Thanks, colleagues. We really, really appreciate the work that you do, AG team, and for coming to brief us this morning. So thank you very much, much appreciated. Sister Mbi, I'm not sure if we can proceed with that set of minutes, I doubt.
Only we don't have a quorum again.
Okay, no, it's fine. Just schedule them for first thing. Colleagues, next week, Tuesday, can we start at 9:15? Sister Mbi, just put that in to members. So we'll deal with all the minutes, that three that was outstanding, and the minutes of the last two meetings. And then because I do know that, yeah, so just put it in, and we'll start at 9:15 next week, Tuesday, and finish off with the minutes. Because as I said, it's just minutes which really they were all corrected and done, and they're just due for adoption. So it's no train smash in that regard. The reports, are we doing those next week? We'll find a day, I don't know. I would imagine so. Okay, colleagues, let's find a day when we are all here and finalize on those reports. I have asked to Honorable Hadebe to facilitate the placement of our reports on the Assembly's program, so that we can, and all those are ones that are outstanding. I know Honorable Van Minden, there's the one that you were specific about. We are working with the programming committee to make sure that our reports are actually scheduled. As I said, there is a long list of these reports of all the committees, and I think the system is a tad bit overwhelmed, and so we will try and jump the queue in that regard, because some of them are urgent and they are overdue as well. So we are working on that, colleagues. So colleagues, the reports that have been circulated, the drafts, may I request you to go through those, and we'll find a day to finalize them and adopt them, and then have them scheduled as well in the House. I hope colleagues are agreeable to that. Going once.
Agreed.
Okay. Colleagues, Right, thanks, colleagues. On that note, the meeting stands adjourned and we'll meet next week, Tuesday. Systemic with Ben and the team. Thank you very much. Have a good day further, everyone. Take care.
Thank you.
You, Honorable Chair. Thank you, Honorable Members. Keep well.
Thanks, Andres. Sharp, sharp.
Recording.